Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today is Wednesday. It's June 28th. Before I get into all the good stuff, please like our channel, subscribe to our videos. There's a link either above or below. And if you're in the YouTube Wealth Press channel, you can subscribe to our VIP room, which I'll be on live today at noon. It's free, and it's the second progression after this video to give you a live market update at noon today. So there's a link below this video or above this video, depending if you're watching on YouTube or not. But if you can't find it, go to the YouTube Wealth Press channel and you'll find it below this video, where you can also subscribe to our Telegram channel. What I'd like you to do is, if you have questions about this video or the VIP room, to post it below this video in the YouTube channel and I'll respond there. But again, the links for Telegram and my VIP room should be near this video. Now let's get into all of this stuff. What are we wasting your time for in the morning, right? So it's about 7:49 in the morning. The market's going to gear up to open up in about an hour and 40 minutes. And as you can see here, the Nasdaq is down quite a bit. The Dow's holding up, but the Nasdaq's down mostly because of China. Now, I'll get into the reason why the market's down, and it may be a nasty downward spiral in the chip sector, and I'll explain to you why. But more importantly, or equally as important, you've got international trades in goods and services. That comes out in about 40 minutes. You've got Jerome Powell speaking and Lagarde speaking as well today, and I'll talk about that in a minute. And you got the petroleum status report, all leading us into the GDP report, so we've got to keep our eye on the bond market. Now, as I've mentioned, the market is down about 42 on the tech, and to give you some idea of what to expect today, we've got earnings on General Mills and Micron. Now, not expecting anything too fantastic with either of the companies. They have been in a fairly... Micron actually has been in an uptrend, but the stock hasn't been doing as well as I would expect it to. And General Mills has not been doing all that well. So we may get a little bit of a downdraft in those two stocks. Now, keep an eye on the overall semiconductor index for the reasons that I'll explain in a minute, and consumer staples, since they've been taking it under the chin quite a bit lately. But I'll talk about them in a bit as well. So just to show you the technology sector, remember what I said? I said momentum levels are going to try to fake us out and make it seem like we're making all-time swing highs again, that we're going for the highs, and then it's going to back away. I think that's exactly what's going to happen. And I'll explain to you why in a second, but there's a fundamental reason why the market is softening. But what I said to you was that we're going to go down for a few days. Tech is going to go up, make it appear like we're going to test this high. We're going to fail, and then we're going to come back down to this level. And I'll tell you why in a second, why I believe that's going to be happening. So, market is down. Now, why? Well, there's a potential restriction on the export of artificial intelligence chips to China, which is waiting on sentiment, while investors are waiting speech from Mr. Jerome Powell at 9:30 about fresh new clues. So Washington is considering a new restriction on export of artificial intelligence chips to China. Now, I'll tell you why. There was a restriction with Nvidia a couple of years ago that, from a new chip that they're making for the U.S. government, to restrict it from China. And I think what U.S. is trying to do is trying to keep artificial intelligence to the U.S. because there's so much potential. So we may have a heightened chip war, which may impact more drama with China in regards to the chip sector. So keep your eye on the SMH. That's this sector right here. That's the chip index, semiconductors. They're opening down about 1.25, and again, I'm expecting them to come down a bit, not really up as a result of this. This could be a major issue. Advanced Micro's down 3%, Nvidia's down 4% pre-market. This will indubitably impact tech and chip stocks today, for sure, which were the biggest driver yesterday. And I told you that momentum levels looks like it's peaking out, which means the odds are we're not going to be going much higher from this point on till we could figure out some catalyst that will cause tech to go higher, especially with this news from China. Microsoft, Apple, Amazon, they all rose 1%. Meta rose 3%. Remember, those stocks are the stocks for the chip sector. So also Delta Airlines climbed and was amongst the top percentage gainers. And I mentioned airline stocks. I actually mentioned UAL, which may get a little boost from Delta's upside move today. But those stocks are doing good. I also mentioned earnings on Walgreens were going to be bad. The stock dropped 9%. I know some of you made money on that trade. If you have, let me know in the Q&A section of the YouTube video. Now, yesterday we saw consumer confidence. The data was really good from the Fed. Consumer confidence went to a 1.5-year high. Durable good orders came in stronger than expected. New home sales blew through the roof at a 1.25-year high, which was amazing and showing us that our economy is more or less stable right now. I mean, we could be going into a mild recession, but right now, economic data is positive, which means what the Fed is doing is working, but that means that the better the data, it gives them a better or a bigger license to keep raising rates. So this is not good for interest rates, and it's not good for tech stocks. This is one of those scenarios where good data is bad and bad data is good. It's a weird economy we're in. Today, market participants will be watching speech by Jerome Powell. If his lips are moving, he's probably not being honest with you. You're going to see Christine Lagarde, Bank of Japan's Kazu Uda, and Andrew Bailey will also be at the panel. I cannot wait to hear what Squirrely's going to be talking about today. U.S. crude oil inventories will be reported today, and the Federal Reserve will give us results of their stress test for banking industry. Keep an eye on bank stocks, especially regional stocks. Ticker symbol KRE, this one right here. That's KRE right here. And we've been short this thing since here. Hopefully it'll bust down and come back down through the bottom. China. They closed flat following the release of data indicating a decline in profits from Chinese industrial firms. Remember, they're the biggest exporter in the world. If that's happening, that's not good for global economy. While sentiment was also hit by news of the United States considering a new restriction on export of AI chips to China. Imagine that. And I have a feeling it'll be mostly grounded in Nvidia. That's where they have the privacy clause with. Japan snapped a 4-day losing streak, fueled by technology and financial stocks. As I mentioned earlier, keep an eye on Micron, semiconductors, and consumer staples today. To a smaller extent, BlackBerry, but that's not here nor there. But General Mills is a big consumer staple company. Now, a few things I want to discuss with you that are very, very important. If you look at momentum levels, and we talked about momentum levels, look at the sectors that are lagging right now. Consumer staples, 30% on the 50-day. Energy, 35%. Utilities. Now, if you look at consumer discretionary, 83%, 66%. Communication services, 75%. These are coming off overbought levels, and I think the news today is going to undo much of this, and it'll come back down. But as you could see here, the momentum levels on technology are not where they were before. They're coming off. They're trying to come up, but they're coming off, and I think this is going to come down, much like we saw here. It huffs, it puffs, and then it comes down. So I'm not overly bullish on technology right now. Now, looking at the major sectors, and I want to look at the major sectors to give you some perspective, you could see financials are starting to firm up a little bit. Energy looks like it's going to be choppy between 82 and 78 for a while. Consumer staples, I think they're going to stay choppy, especially with the fundamental data. But technically, they are a little bit overdone now to the downside. So I think we may get some upside. I like healthcare. I like financial, and I like consumer staples right now. Industrial stocks are breaking higher. I don't think there's that much upside here unless there's a major catalyst. Utilities are choppy right now. You'll notice that industrial and basic material are pretty much doing exactly the same thing, which is because they're highly correlated. But with this downdraft in China and with the fact that we're hitting resistance here, look at XLB here. Let me show you. See, kind of we're I think this is going to come back down, and it's going to put a lot of pressure on the Dow Jones. You could see that the Dow's now back in here, and it's overbought, and I think we're going to come down. So I think XLI are peaking out, and you can also tell by looking at momentum levels. They don't want to cooperate. I think this is overdone, and I think we're going to come down. I think tech is going to be, as it led us up, it's going to be leading us down. But look for industrial, basic materials, technology, communication services, and consumer discretionary. Well, not consumer discretionary, because consumer discretionary, you got Nike earnings tomorrow. But technology, communication services, here, technology, I think this is going to come down, start coming down, and if it breaks this 167 level, we're toast. There's going to be a lot of selling if that happens. Consumer discretionary, I think we're going to have to see what happens with Nike tomorrow. But communication services is in the same boat as technology. I think yesterday they tried to reach and test the highs, suckered a bunch of weak hands in, and I think they're going to take us down. And when they start breaking below this level, you're going to get a lot of panic selling. Real estate, I think, is going to stay good for the next couple of days. The new home sales were great, and the trajectory is great. Again, I'm very nervous about industrial. I'm very nervous about material. I'm very nervous about technology, and I'm very nervous about communication services. I feel okay about financial. I feel okay about energy. I feel okay about consumer staples. I feel pretty good about healthcare. Utilities, I think, are maybe coming up because they're a little bit overdone to the downside. And real estate, I think, will have another couple of days. Consumer discretionary, I think, is going to wait to see what happens with Nike. I think this has been a little stronger than technology and communication services because there's less technology, and technology right now is not where you want to be. It really is not. So consumer discretionary may get a little bit of a pass, but not too long. And I think tomorrow's Nike report will have a bigger impact on it. Now, what's the strongest? Remember, today's Wednesday. We talk about actionable trades, red meat. What's the strongest and weakest, or what's the best high probability trades right now? Well, to the downside, I like Kellogg's. I think Kellogg's, I think it had earnings. Let's see here. Did it have earnings? Kellogg's. What is Kellogg's earnings? I think it already had earnings. Yeah, I think Kellogg's already had earnings. And where is Kellogg's? I think the stock is going to fill this gap to the downside. Now, what you want to do is you want to wait for it to break the low, which I think it'll do this morning. It's already down 119. What I would do here is I would look for this option that has 23 days left, and I would be buying the 65 put. Could probably buy this put for about 35, 40 cents, and there's a good chance it could double. There's plenty of open interest and plenty of volume on it. It'll probably open about 40, 50 cents because the market's already lower. But I'm expecting this stock in the next couple of days to come down and possibly go down to the 64 level. So there's a couple of dollars in there. Don't expect it to go below 64, but I think this gap is going to get filled and it's going to go to 64. So buying the 65 put can give you some exposure to the downside. It's also overbought in the short term. So I think this gap will be filled. Also, remember, we always go with the long-term trend. The long-term trend is bearish. Don't think there's a lot of upside here. I think this is going to revert lower. To the upside, I like Boeing. I think Boeing is going to continue going up to the upper end of this range. I think it's going to stay within this channel. I don't think anything's going to disturb it. And if anything, technology money will be going into bluer chip stocks in the initial downside. It's already up 2.5 points or 1.2% for the day, and we haven't even opened yet. I would probably wait for a pullback, but I think Boeing is going to go to the 220 level, and Kellogg's is going to go to the 64 level. Now, before I let you go, I've got something really, really exciting for you today. And remember, my VIP room link should be near this video. It's at noon today, free, no cost. But I've got something even more important. I've got something really important for you. I can't believe the day's finally here. But my top secret project is finally ready. Yay! I've been working with a private group of beta testers. There's about 92 or 93 people in the room to perfect a new kind of software. Software so powerful, it can track when big money, Wall Street firms are likely to flood into a stock. That's right. And here's the kicker. I'm so convinced that this new software will change the game for retail traders like us. I filed a patent for it. Yes, a patent for it. Yes, a real patent. Now get this. It signaled 21 winners out of the last 25 trades. Closed trades. Pretty good, huh? We actually closed 2 more yesterday, so it may be 23 for 25. I'm not even sure, but it's got like an 85% win rate. It's doing really, really good. Profit factors like 2.5 to 3. It's killing it. It's killing it. So I'm going to reveal it at 1:30. That's right, 1:30 Eastern time on Friday. Today is Wednesday. On Friday, day and a half from now. You have to sign up. Click the link below or above to save your seat for the big reveal of my patent pending software. You guys are going to love this. 85% win rate, 21 out of 25 trades. We've been tracking it now for about 5 months. It's been killing it. I mean, it's been killing it. And my private group of beta testers is very happy. I mean, really, really happy. I mean, they're ecstatic. You guys need to check this out. Come Friday at 1:30 p.m. Eastern Time. Do not be late. You will love this. Make sure to like this video, subscribe to our channel, go to YouTube Wealth Press channel, and all the links to my Telegram, the links to subscribe to my Telegram, the links to my VIP room, the links to my presentation on Friday at 1:30 is there. It's all there waiting for you. Make sure to comment below this video. I'll see you later and have a fantastic hump day. Bye.